Michael, how are you?
I found something really interesting.
The whole housing market is propped up on these bad loans. They will fail.
The housing market is rock solid.
It's a time bomb.
The biggest problem that we have had is that in the early stages of just printing money, or in the early stages of telling the people, we're going to give you houses, it looks pretty good. You know, print money, that's good, but wages go up, and oh yeah, we can buy a house, interest rates are low. But what they don't tell you, in time, you know, it collapsed, and the housing bubble collapsed. Well, we're back doing the same thing again. So everything in a way is a bubble. And the currency situation is in a bubble, and that's why there's not room for optimism about the current system.
We begin with some startling new facts about buying a home in this country. A lot of Canadians are buying and selling right now. Housing sales were up in 75% of Canadian cities. The biggest increase in sales is in Toronto, and that's where prices are also soaring faster than anywhere else. The average price of a detached home in the Greater Toronto area is up 20% from this time last year. There's fear the bubble may burst, and political leaders spent today trying to ensure it doesn't.
At this sales event for prospective homeowners, buying a flat has become like winning the lottery. For some, it's their third try to purchase a 70 square meter flat for $1.5 million.
I expect for nothing, then no disappointment.
Prospective buyers are given a number, and if picked, they will get a chance to buy a home. It's been like this for nearly a year, pushing home prices up 23%, making Hong Kong the world's most expensive residential market. The last time there was this kind of a buying frenzy was in 1997. The market crashed soon after. Average property prices are now 90% more than at its peak 20 years ago.
There is no plan to build all these hundreds of thousands of homes. We have a housing crisis. I have to look at, I don't mean to be patronising, but a younger generation around this newsroom who can't afford to get their foot on the ladder as well, because prices and multiples are at record levels. You've got an average salary in the UK which is about 26,000. You've got average house prices which are, in London for a semi-detached house, about £500,000. The multiples just don't work. There is a massive housing crisis, and I don't see how we get out of it.
Today host a housing policy summit focusing on older Australians. Ian Yates is the Chief Executive of Australia's Council of the Ageing, and he joins us now from Canberra. Ian Yates, good morning. Thanks for joining us.
Good morning, Virginia.
So is the old assumption that by the time we get to older age, we're all done, we're sorted, the house is paid off, we're safe as houses, is that assumption now gone by the by?
Well, it's certainly going by the by for some people. And what our experts will be telling us today is that if we're not doing something about it pretty soon, we will be facing a really significant crisis. We've seen some early warning signs. We've been telling people for several years now that homelessness is up amongst older people, and particularly older women. And it's not due to many of the factors of traditional homelessness. It's an economic issue, a financial issue for people. But we're also seeing, for example, more people entering retirement with a mortgage, and we're seeing the rates of home ownership amongst retirees starting to decline, and the projections are they'll decline quite dramatically in the next decade.
I've been homeless for like 4 years now. It's easier to get around downtown and everything as opposed to other areas. We all know each other really well, so we kind of stick together.
I guess when they say like you're like paycheck to paycheck and you only can, I guess it's really true, you know.
About a year ago, I was working as a care provider for a gentleman who ended up passing away, and we wound up on the street because it was a live-in situation.
I used to judge homeless people back before, and now I would say that I do have a different mentality about homeless people. Mainly they're just the same as anybody else, just as I used to, be I feel like everybody else.
I don't have such a reason other than I ran out of resources. I doubt that these people would open up to you, but each one of them has their own personal horror story.
Being homeless for such a long time, it seems like it becomes an addiction. It becomes, like you get used to being out.
I'm just taking it day by day, that's all. You know what I'm saying? I have no comment on it, because I ain't living. I remember when I'm homeless, I ain't living.
There's always a case-by-case basis and an exception to the rule, and I think that everybody deserves a chance to be considered for whatever the reason is that they're in the situation they're in.
There is a growing number of people in my age group that are finding themselves on the streets. We're a little too old, some of us, to go back to moms at this point, you know, and we just want to handle it ourselves, and it just kind of is what it is, you know.
You don't like people to tell you, hey, well, you gotta do this, you gotta do that. Well, that way, I myself, I do whatever I want to do. So that's why most of the time I like it on the streets.
Try those other programs and everything. I'm probably in the same. I feel I'm probably a lot stronger, but I feel like I'm probably in the same area.
We're not as bad as people think we are. We're people too. We're just stuck in a bad situation, and not all of us put ourselves here, you know. Some of us have really bad circumstances that got us here that were out of our control, so we're just people too, and we like to be treated with respect and kindness just like everybody else.
One month ago, I said that the Vancouver housing bubble is back, and it's almost greater than ever. Fast forward to today, when we can scrap the almost part, according to the latest data from the Real Estate Board of Greater Vancouver. Almost a year after British Columbia implemented a 15% property tax, which targeted foreign buyers. In May, the biggest real estate bubble of all time did the impossible, and in a testament to the persistence of Chinese oligarchs, criminals, money launderers, and pretty much anyone who is desperate to park their cash just about as far away as possible. After a modest drop following last summer's tax, the Vancouver housing bubble has bounced right back to new, all-time highs as prices of detached, attached houses and apartments all surged to new record highs. According to the Real Estate Board, the breakdown in prices by category was as follows. For condominiums, the benchmark price was $571,300 last month, a 17.8% jump over the past 12 months and 3.1% more than April 2017. The benchmark price of an attached unit was $715,400, 13.1% more than a year ago, and a 1.9% increase compared to that in April 2017. The benchmark price for detached properties was $1,561,000, which was a 3.1% increase over the last 12 months and a 2.9% increase compared to that of April 2017. The only thing that did fall in May was the number of actual transactions, as residential property sales in the region totaled 4,364 in May 2017, a decrease of 8.5% from the 4,769 sales in May 2016, an all-time record. In other words, All that the 15% surtax achieved was to somewhat slow down the rate of transactions quite heavily, or perhaps home flipping. Meanwhile, as sellers held out to find more aggressive buyers, they were in luck as the new wave of buyers has emerged, and undeterred by the 15% premium, they have been slowly but surely lifting all available offers. While there is little we can add to this month's update that we didn't already say a month ago, below we again put Canada's housing market and bubble in perspective with some of our favourite charts, first showing the total Canadian household debt compared to the US. Most of this is in the form of mortgages. Next, despite Canada's low rates, the debt service ratio of a typical Canadian household is nearly 40% higher than when compared to the US. And finally, the punchline: indexed home prices in Canada compared to the US. This needs to commentary. In retrospect, perhaps Canada was lucky that the attempt to deflate the Vancouver housing bubble failed. Had it succeeded, however, and spread across the nation, leading to a historic crash and collapse in collateral values and widespread defaults, the mean reversion outcome would have been devastating for the Canadian banking sector, which of course is not to say that Canada's problems have been fixed, but at least, for now, they can be kicked once again, courtesy of Chinese buyers who would rather park their cash in Canada than back at home. The rate of rising home prices in Canada's largest city slowed slightly in May as a new tax on foreign buyers, one of 16 new measures meant to cool the country's white-hot housing market, failed to cool the Toronto housing market, despite a dramatic rise in new listings. Reuters reported, citing data from the Toronto Real Estate Board. The industry group reported that home prices rose 14.9% last month from the same period a year earlier, well below the pace of gains seen in recent months, while new listings jumped 48.9% and sales fell 20.3%. According to the Reuters report, back in April, the provincial government of Ontario announced a slew of drastic measures, which included a 15% tax on purchases by non-resident foreign investors, to tamp down on the housing market insanity that left many locals unable to buy even a modest home. Attempts by local authorities to rein in price gains in some of Canada's hottest urban markets have threatened to unleash a crisis on par with the US subprime implosion of 2007. Yet, wealthy foreign buyers, which are primarily Chinese, hoping to protect their wealth by moving it out of China's debt-laden economy and into the more established markets in the West and the antipodes, are refusing to quit. Perhaps, as we previously asserted, homeowners in the US's northern neighbour were lucky that an earlier attempt to deflate the Vancouver housing bubble, the biggest of all time, has mostly failed so far. In May, the Vancouver housing market did the impossible and is a testament to the persistence of Chinese oligarchs, criminals, money launderers, and pretty much anyone who is desperate to park their cash as far away from China as possible. Bounced right back to all-time highs after a short-lived dip in prior months. Toronto's new tax on oligarchs mirrored a similar measure adopted by Vancouver's own local housing board last year, including a 15% tax aimed at foreign buyers that was similar in its construction to the new measures implemented by the Ontario Housing Authority. Luckily for Canadian homeowners and the Canadian banks who supplied them easily securitized mortgages, who were forced to buy at unrealistic home valuations, the mean reversion outcome that could have been brought about by the introduction of these new taxes has yet to materialize. However, investors aren't out of the woods just yet. According to Jason Mercer, TREB's Director of Market Analysis, who told Reuters that a delayed reaction could be brewing. Mercer shared his thoughts about the market with Reuters, asserting that it's too early to say whether the surge in new listings in Toronto last month was a response to the new rules or simply sellers responding to the recent surge in prices, or whether the rise in listings or drop in sales will be sustained. In the past, some housing policy changes have initially led to an overreaction on the part of homeowners and those buying, which later balanced itself out. On the listings front, the increase in active listings suggests that homeowners, after a protracted delay, are starting to react to the strong price growth we've experienced over the past year by listing their homes for sale to take advantage of these equity gains. As the TREB report showed, sales of detached homes led the overall drop in demand in May, falling 26.3% from a year earlier, while sales of condominium apartments were down by 6.4%. Another reason for the buoyancy exhibited by Canadian home prices could be that the supply of housing stock dropped to a 15-year low in 2016, and it will take time for new listings to rebalance the market. At the end of May, we had less than 2 months of inventory. This is why we continue to see very strong annual rates of price growth, albeit lower than the peak growth rates earlier this year. TREB President Larry Serquay said in the report, "Inventory, which remains low despite the surge in new listings, is another factor propping up home valuations in Toronto, where supply dropped to a 15-year low in 2016. As Reuters noted, it will take time for the new listings to rebalance the market. But even as Canadian and Australian regulators attempt to rein in the obvious housing bubbles brewing in their respective local markets, their own efforts have already been eclipsed by China's Communist Party, which adopted a new set of capital controls back in January meant to stop oligarchs from moving money out of the world's second largest economy, even as it faces a slew and political risks." Here's a rundown of China's new regulations, courtesy of Bloomberg. Customers must pledge money won't be used for overseas purchases of properties, securities, life insurance, or investment type insurance. While such rules aren't new, citizens previously didn't have to sign such a pledge. Customers must give a more detailed account of the planned use of funds, such as business travel, overseas study, family visits, medical treatment, merchandise trade, or purchases of non-investment insurance policies, including the timing by year and month. Violators of foreign exchange rules will be added to the currencies regulators watch list, denied foreign exchange quota for 3 years, and subjected to anti-money laundering investigations. Customers must confirm compliance with restrictions on money laundering, tax evasion, and underground bank dealings. Customers must now confirm they aren't lending or borrowing quotas to or from other citizens. And while some of the new capital controls above may not seem that onerous, they're already threatening real estate deals from London to Melbourne, as Chinese buyers are finding it increasingly difficult to fund down payments.